Hi everybody, I'm Matthew Dixon bringing you the latest traders report on 3.0 TV. The markets have been very much in turmoil for the last few days. We've had quite a bit of a sell-off across markets. Bitcoin in particular has fallen, been up and down a little bit, but it's actually typical of a corrective phase in the market. So this, I believe, I'm looking at XRP here, is a consolidation phase. It does not look impulsive to the downside because there's so much choppiness. It's very much a sideways move, indicative of a wave four, Elliott wave four. So I do expect that we will resume to the upside reasonably soon, and we should take out the all-time high here for Ethereum, not Ethereum, sorry, for XRP. Ethereum's bouncing around the 4,000 mark, just dip below a little bit. In fact, I'll just move over to Ethereum just to show you where we're at and to see what kind of pullback we've had. So I did mention that the pullback here was potentially wave four complete as an ABC, or these things can always turn into a more complex correction. So the wave four would just be moved over here. So instead of just being an ABC complete here, basically you have ABC, which can be three waves down, then three waves higher, then five waves down. So that'd be a flat correction. And normally, a correction like this will go into territory of round about the previous wave four of lesser degree. And so we can see that here, that this wave four is roughly the territory of this wave four. So I think it all makes sense that this is a correction. I don't think it's impulsive down. This move, I'll just try and open this out a little bit. The move here on Ethereum really doesn't look impulsive. There's a lot of overlap. You know, we've got this move down, this move up, this move down, this move up overlaps this move down, and this move up. You know, there's so much overlap there. So this does not look impulsive to the downside. So we've got basically some kind of A wave down, B wave up. So we can even see quite clearly the B wave is made up of a B, and then a C. So that's a nice B wave. And then we'll get a final C wave at that larger degree here. Possibly wave one, wave two, wave three, wave four, wave five. So there or thereabouts, somewhere near end, completion of this correction. So it's at times like this that people start to get disheartened, thinking maybe the market's turned, maybe we've already seen the all-time highs, we're not going to see them again. And when people start to turn negative and you get a lot of sellers, that's when you actually run out of sellers in the market and potentially you only have buyers. So when buyers start to come in, there's not much resistance to take prices higher. So at some point, we're starting to see a bit of capitulation really particularly from retail traders, but this is the time when institutional traders might be picking up those assets at lower prices. So as I say, again, just to confirm, this was clearly, I mean, we can clearly see this was an impulse from here. One, two, three, four, five, and we actually had some beautiful Fibonacci relationships where even within wave three, the third wave here, so we got another one, two, three, four, five. The third wave was exactly a Fibonacci extension here, 4.236 times the earlier first wave. So again, beautiful Fibonacci relationships there. It just works. It's a really nice impulse there. And this, in contrast, as I say, lots of overlap. So I'm reasonably confident, very confident, really, that we're going to see higher highs to come, but just got to shake out those weak hands, and effectively the institutions, as I say, will buy at lower prices. Same sort of picture, really, with Solana. We've had quite a sell-off from Solana. There were some strong technical signals saying that potentially this was a local top, at least a local top, solid turning point. I know a lot of technicians were selling around this level, and some say it's even the actual going to be the high for this cycle on Ethereum. I don't believe that's the case. I still think we've got higher to go. So if I were just to open that out a little bit so we can see that we had basically, I mean, I can understand why people are thinking, I mean, this is quite impulsive move down here. It is quite a powerful move down. So, I can understand some people might say that the Y wave top is already in here. That is a possibility, and we can't, categorically say that's not the case because we had a correction down. I'm confident that was a correction. And we have had a correction higher, an AB, a large ABC higher, or it could be, WXY. But I still suspect we may have another push higher to go. And really, the main reason behind that, uh, on Solana, it's not absolutely clear. As I say, this looks a very impulsive move down here, very powerful move down from this local high of 250, 252, somewhere around there. And we're now at 204. So that is quite a powerful move down with no overlap. And even if I go on to the 1 hour and just open it out a little bit, or should I say even, yeah, just spread it out a little bit so we can see. From the high, it is relatively impulsive on the downside, although towards the end here, there seems to be a bit of overlap. Um, I just think, as I say, looking at correlations across the board, XRP for me is the clearest one that tells me I believe still that this is some kind of corrective wave forward to downside. And we've probably actually seen the low here. So this is just maybe a first wave higher, getting a bit of a pullback now. And then we should hopefully get a new push up soon. As I say, that should take us to new all-time highs for XRP. Link is actually quite a nice clear picture as well, I think. We had a wave three high. I believe it's a wave three high on Link. And then we've had an ABW, ABX, and looking at ABY. Now, I think that most probably the Y wave completed here. It's not absolutely certain. So when we have AB and the C wave makes up, so the ABC is actually a Y wave, a larger Y wave. So here we're looking for a C wave, which would be in 5 waves. So the question is that 5 waves complete here? One, two, three. I mean, we'd have to look at a shorter time frame. This is already the 1 hour time frame. So it could be one, two, three, four, five somewhere internally, or it could even be one, two, three, and we worked on wave four, and we could even get another push down a little bit lower. This is actually quite a interesting support level, quite a strong support level for Link. Uh, we we basically have measured the W wave down, transpose it to the top of the X wave, and 100% extension takes you to basically $20.12, virtually $20 on the nose almost. We haven't quite reached there with this push down, but we got very close. So that's why I was thinking we may be over and complete here, or we may just get another final push down, maybe even slightly spike through that level to knock a few more people out who will have stop losses all around this level because it is the 100% extension. Then people are going to obviously put stop losses in there. So markets tend to try to take stop losses out. It's a great way for these market makers and whales to collect money. So we could see a spike below there possibly. My hope is that that was actually the end of Y wave and wave four, and we push up to the upside now. And again, that's still quite feasible. And so, I'm certainly not selling, even though the markets could push a little bit lower. I'm not selling. If it does dip lower, I'll actually look to ideally be buying the dips because this does look like a correction, WXY correction. Whether it's over here or whether it's got a little bit lower to go, I don't know. But as I say, I'll be looking to buy dips personally, and I do think that the market's got quite a bit higher to go. And as I say, it's pretty well the same wherever you look across the board. We have seen a push up. I think inventories, I think, decreased a little bit. And so that's allowing oil to push higher, which is the reason I'm looking at oil. It does actually have an impact on the market because oil is a big component of spending. So basically, the cost of doing business, transport, manufacturing, all that kind of stuff. So it does affect inflation. And inflation is the one thing that we need to see come down a little bit to allow these markets to really flourish. Inflation is what's, I think, holding these markets back because we're already seeing slowdowns in the US, slowdowns in services, slowdown in employment. So that side of the equation, we're actually seeing things slowing down, but we haven't yet seen enough of a slowdown with inflation to allow rate cuts to really be sort of guaranteed moving into the future. And again, we don't want to see too much of a slowdown, but the problem is it's the wrong side of the equation that's causing problems, sticky inflation. If we're still seeing robust growth, that would be slightly better for risk assets. But this is, I think, what's holding things back. And even cryptocurrency, you wouldn't think, but it's actually so tied to the risk assets now, the main market, that when we see a slowdown in the US, which is obviously the driver of the world at the moment, the main economic driver, then it does affect these risk assets. And we're even seeing a bit of dollar strength. I know the US current account deficit reduced massively by over 40%. And that may be a result of tariffs. It may be part of the slowdown. When things slow down in the US, US consumers tend to buy a lot less, and that would actually benefit the current account deficit. It reduce it. So that seems to be what's happening at the moment. We are seeing a slowdown. And as many of you may know, on my Twitter feed, my X feed, my pinned post is all about recession coming. And I do believe the economies are going to slow dramatically. I think they will have to reduce interest rates and they will eventually come back to printing more money with quantitative easing. So this isn't necessarily good for markets. We don't want to see such a slowdown, but I think it's on the cards. So we need to be careful. But the markets look to catch as many people out as possible. A famous saying is, the market will stay irrational longer than you can stay solvent. So it's maybe irrationally weak at the moment because there's a lot of positives behind crypto, a lot of positive developments with regulation and with institutional adoption, and yet we're still seeing these sell-offs for the time being on the crypto markets. So again, the market will stay irrational and maybe sell off more than people would expect. So would cause losses for most people. But as I say, I think that dips are just buying opportunities and dollar cost average opportunities. So all in all, I remain positive. I remain bullish. But we just have to basically sit tight, be patient, and wait for the markets to rise again, which I personally believe they will. But obviously, do your own DD, check out what other people are saying. But I've been in the market a long time, and I think this is just a correction, and we should soon resume to the upside. So I hope that was helpful and encouraging, and look forward to catching up soon next week.